All right. What is up, tycoons? What's up, traders? Super excited for today's video. We are going to break down natural gas and go over all of the natural gas charts. All right. We're going to take a look at the futures, boil, UNG, and cold, and really give a nice detailed technical analysis of all of those charts. I did recently just drop a news related video and go over some of the fundamentals surrounding natural gas. This is the thumbnail for that video. Feel free to watch that video after this one if you want a little bit more info on some of the news and just some of the fundamentals surrounding natural gas. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. And you can also email me anytime for a one-on-one personal coaching session at zackleytrades@gmail.com. I do those every single week, and we can work on setting up a time together that works for both of us. And so here we are back on TradingView, and what we're looking at here is going to be boil. Okay, we're starting off on boil. We were originally looking for this cup and handle to form. Now you could say that this still is a cup and handle, but this handle right here seems to be extending a little bit too far out to me, in my opinion. So I am going to get rid of this drawing. Now, some important things have been happening on Boyle, and the main thing, in my opinion, is that we have held this 57.23 level of support. Okay, you can see one day right here we barely wicked down below it, all right, but the next day we gapped up above it, and we've done a really good job of maintaining that. Now, overall, the structure that I'm looking at is I'm looking for a correction, right, to the upside, in fact, because if you take a look at the Boyle chart, it's been a massive, massive puke fest, right? I mean, the entire year of 2023 has been very negative for Boyle. And so, we really haven't gotten any strong type of bounce or correction to the upside. So I'm looking for an ABC structure to the upside. And your A wave and your C wave, those should be 5-wave impulsive moves. And then your B wave right here should be an ABC correction. Now, to me, it seems to be following the analysis very well. And, it seems that we're starting to get our wave 2 pullback of the possible next 5 up. That's going to take us up to around $89. Now, before we get to that $89 range, there's some really important price targets. Okay, basically we have this zone right in through here, okay, which is going to be roughly about $75 up to $80. That rough zone, we haven't tested this level in a while. If we take a look, the last time we tested that level was very in the beginning of summer. Okay, we can call it right around May 20th, May 18th, something like that. It was around the last time we were at these levels, and we've continued to sell off each time that we've come into these levels on the Boyle chart. You can see supply zone here, we drop down, supply zone here, we drop back down. So, ultimately, before we get up to that $89.15 price target, there is a lot of work to be done, and we've got to break through that zone. Now, we did get our 1, 2, 3, 4, 5 up here, and then we got the ABC correction. And, this drawing has been here as a guide, as an outline. Okay. I don't have a crystal ball, and it's not always going to perfectly follow the analysis, but for right now, things are looking smooth. And really what I mean by that is holding these 3 levels of support, right? 57.23, 60.94, and 64.65. These right here, these are your 3 most common and well-respected Fibonacci's, all right? So we have the swing low connected up to our swing high. And if we want to get this C wave up, that'll be a 1, 2, 3, 4, 5 up. We needed to hold above this 57.23 level. And you can see we did come down below it just a couple times, but ultimately we've done a really good job of maintaining that. So now that we've gotten a slight bounce up there, it appears we are starting to pull back, and this would be our wave 2. Now, wave 3 is typically the largest of the waves, so we really need to see a big move up in the price of natural gas sometime soon. If we take a look here, this yellow line right here, this is going to be our monthly anchored VWAP. And you can see we are approaching this monthly anchored VWAP. Hedge funds, institutions, market makers, people like Ken Griffin of Citadel, one of the most successful people in the industry, all right, whether you like him or not, and whether you like Citadel or not, they're famous for saying, and it's noted everywhere, that they buy and sell at the average volume weighted price. Now, a lot of people think that they're just talking about the intraday VWAP, but they go off of different metrics as well, right? So I like to pay attention to the week to date anchored VWAP, the month to date, the quarter to date, year to date, different anchored VWAPs, okay? So we are approaching this month today anchored VWAP, and that will be an interesting area. That's going to be right around $62 on Boyle. But some things are happening right here, all right, that we really need to pay attention to. If we go to the natural gas futures, All right. We're basically at the make or break point right now. So you remember that things like boil, things like cold, all right, those are going to move based off of the futures, all right, and how the futures are trading. And if you take a look, all right, we've been rejecting this key level here on the futures, all right, which is going to be 228.1. Now I use the MCX futures on TradingView, all right. So the numbers are going to be a little bit different, but ultimately the structure is still the same, whichever chart you're looking at. But 228.1, we'll zoom down to the 4-hour chart in a minute, and you can see how well that level is been respected so far. But currently, what we had was we had some algorithmic selling right here, okay? And that's what this structure is. This is very controlled selling. This is healthy. This is not bearish, right? Now, we broke out of here and we're retesting the trend line here today, okay? So, we're looking to get a bounce off of this trend line above this 228 level to retest the previous highs that we had. Now, on the natural gas futures, something worth noting is that we are above the year-to-date anchored VWAP, and we bounced today at the month-to-date anchored VWAP. So bulls do have, essentially control right now, and favor would go to the bulls, being that we're above those anchored VWAPs. But, we really need to be cautious of one scenario, which is a look above and fail. All right. And the reason being, if we zoom in a little bit more, just so it's clear, all right, the real thing you need to be cautious of is the look above and fail. And the reason is because this right here is the full opportunity for bulls to take control and show that they're in control of the price action, right? If they don't do that on this retest, and they look above and fail, and we drop back down into this range, it's going to show you that the bulls weren't present, right? And they didn't take advantage of the opportunity. And it's going to let you know that actually this was a false breakout and that sellers are in control. So you do need to be very cautious of that, right? If we break through this month to day anchor VWAP right here, which is about 218, we could start to see it come down, test this 213, 203, and then we have 193. Those are going to be some of the areas where price action is going to be drawn towards, because most likely we're going to drop back down into the end of this range. Now, when we zoom in here on the 4-hour, we can see, how many times really that we have tested this level in particular, this 228 level. When you look at the amount of touches, and remember, the more times that a level is tested, the weaker it's going to get, right? So we have 1, 2, 3, 4, 5, 6, 7, 8, then we have 9, 10, 11, 12, 13, 14, right? 15, 16, and 17 times that this level here at 228 has been tested on the natural gas futures. So, the way that I'm understanding this price action is if we are going to rise back up through this level is getting weaker and weaker each time. And there's a stronger possibility and increased odds that we are going to break through this level and potentially get that 100% retracement on the natural gas futures. But right now, as you can see here on the 4-hour chart even more clearly, we're right here at our month to day anchor VWAP, and we really need to hold there. If we come back down into this range, that's not going to be a good look for natural gas. So definitely keep that in mind. That's something that you guys want to be aware of, and you definitely want to be tracking the futures if you're trying to trade things like boil, cold, or UNG. Now, speaking of UNG, let's go ahead and take a look at UNG, and we'll break down that chart for you guys. So if we zoom in here and really just go over what it is that we've been looking at on UNG, it looks very, very similar. All right. Now, to me, what this looks like is a nice 5-wave pattern to the upside with an ABCDE falling wedge. Now, originally, I had drew this as another selling channel, all right, another controlled selling channel here, which is bullish, right? You see this controlled selling; it's very bullish. It's not capitulation to the downside, right? It's rather, controlled selling here to a designated point, and in this case, it was 6.7. When we came down to that 6.7 support level, that's when we saw the breakout. But we did get an ABCDE right here for our wave 4. And once you get that wave 4 and it's an ABCDE, typically you see your wave 5 to the upside, and that's going to be targeting around $8 to $8.21 on UNG. Now, UNG is below the year-to-date anchored VWAP, so that is going to be a strong resistance level here, where potentially we could find sellers. That's going to be right around 773. Now, notice the shape of the year-to-date anchored VWAP. Here, it's in a strong decline, and we're actually starting to see it flatten out a little bit, which is a good sign. Ultimately, we want to see it start to curl up, but for now, we need to pay close attention. Now, UNG is really testing this level here of 715. All right, you can see that that's where we ended up finding a little bit of support today and bouncing back up. So definitely pay close attention to 715. Same thing with the natural gas futures chart. If we get a look above and fail, and we come back down into this range here, that's going to be a bearish signal and show you guys that bears are actually in control of the price action, not bulls. And it's going to be indicative that we're going to head lower in the range to possibly 642, 667, and even if we wanted to go all the way down to 606. So that's what I'm looking at when it comes to UNG. When we look at KOLD, all right. KOLD, in my opinion, has flipped a key level, right? So it broke through the 61.8% retracement level, which is 60.36, after this very strong move to the upside, right? So we had a huge 5-wave impulsive move on KOLD, 1, 2, 3, 4, 5. We came up to the targets just short of 93.79, and we're looking to see if we're going to get an ABC correction. Now, this ABC correction is also lining up with our bear flag that we have here at the moment. So essentially we would be looking for something like this, right? And we come here and we say we have an A, B, C. All right, that's roughly what we would be looking for. We have this bear flag here on KOLD. You can see that actually, if we zoom in on this, this is a very, very textbook example of the look above and fail that I've been trying to really, emphasize, okay? Because this is something very simple, but it's very powerful, right? So you notice how we have the triangle pattern here, right? And we have the two trend lines. We get the breakout here, okay? And this is the moment where the bulls on KOLD were supposed to step in and drive price higher, but rather they looked above and they failed. We came back down to the lower end of the range, and then we actually gapped down from there. And now we're below the month to date and the year to date anchored VWAP for KOLD. All right, so those are going to be potential areas where we could come up and find resistance. Price action may be drawn towards these at the moment. That's going to be right around 59.24, then 59.99. Let's just call it $60 and 60.36. Ultimately, if KOLD stays below this level here of 60.36, we're going to stay and remain bearish on KOLD, and most likely it's going to continue seeing downside pressure. But if we reclaim that 60.36 resistance level as support, then that's when we could see further upside potentially in KOLD, and we'll have to reanalyze at the moment. If you take a look at your MACD right here and we zoom in on this for KOLD, it's very, very close to rolling over. And remember, KOLD goes down when BOIL goes up. And so if we see this red line here cross below this yellow line, that could be a sell signal, right? Another important thing to notice is that this initial bullish divergence trend line that we had on the RSI. So your RSI is your relative strength index. This is going to measure the relative strength of a stock at its given prices. And you can see here that we initially were creating these higher highs, right? So if you look, we had a high here, we had a high here, right? So at the same exact point, we have highs on the chart. And then what do? We create a higher high, higher high, higher high, and an even higher high yet again here on KOLD. And what are we doing? We're creating lower highs on the relative strength index. This is a simple term known as bearish divergence, and it's an indicator you're going to see some type of bearish activity. And sure enough, we did get that bearish activity. And if we look back at our MACD even, all right, and we, zoom a little bit out on this, you can see that the MACD ended up giving a sell signal shortly afterwards as well, right? So, right here, all right, what you see is the bearish divergence, and your MACD is going to be a lagging indicator, right? So the RSI is known as a leading indicator. The MACD here is known as a lagging indicator. And initially you get that bearish divergence right here. And then you see we get the MACD crossover to the downside, and that's when we get the move down in KOLD. All right. So something worth noting that I basically wanted to, show you guys is that we're still below this bearish divergence trend line, and KOLD has the potential to really break out if it breaks through this bearish divergence trend line. Okay, this is something that's been holding the price pressure back of KOLD, and even though it seems like KOLD has been dropping pretty hard, if we take a look and we just put so make a box right here, it's basically been in a broad range and trading sideways, right? It's been basically just going up and down, within this range here, ultimately looking for some direction for the next big move, which is either going to be up or down, right? And so if we do get some of these bigger moves in natural gas, KOLD is going to pay a lot, if you're an options trader, right? Because, we're either going to be looking at a big trade to the downside, and we could see this thing head back down to the 30s, 20s, even the 10s, right? I mean, if you take a look, KOLD, at the beginning of the year in January of 2023 was right around $30, but back in December it was around $10. Okay, back in December of 2022, this thing was only about $10, and it absolutely skyrocketed up to the high 90s, or really to about the mid 90s. And so we are seeing a little bit of a correction there. And there's a potential big money to be made on cold, whether you play it long or short, being that it's a leveraged ETF. Same thing with Boyle. So you definitely want to pay attention to these. If you are more interested in riskier assets and riskier plays, things like Boyle and cold are going to be, the thing for you. You just have to have a plan heading into these things. You don't want to enter into things blindly without knowing some of the risk associated with them. If you're looking for something a little bit less risk averse, you can go to UNG. And if you really want to go the true conservative way, you can try to trade stocks that are related to natural gas, right? So rather than just trading commodity-based ETFs, you can look up some of the top LNG stocks or some of the top natural gas stocks out there, real companies that actually report profits and earnings and revenue and different things like that. You can look up some companies that maybe you want to invest in rather than just trying to trade a commodity ETF, as commodity ETFs are very volatile, specifically things like Boyle and Cold. If you ever want to look that up, I have two videos out. I have a top LNG stocks video and I have a top natural gas stocks video. I go over individual companies related to those fields respectively. Hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel. All right. And don't forget that I do those one-on-one coaching sessions every single day. I've got one going on later tonight. And if you guys are interested, we can work on scheduling a session together. Email me, ZachlyTrades@gmail.com.